Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, May 29th, 2013. We're going to be looking at a lot of charts today, globally as well as in the U.S. We'll talk about some macroeconomics, and also want to make a quick little announcement. Just notice that we've had 9 consecutive months of growth on the website. And that's, basically every month has had more people on the website than the month before at PerfectStockAlert.com, and that's because you guys are actually have been referring to your friends and sharing our videos online. So I'd like to thank you guys for that. We don't grow unless you guys support it, because it's totally word of mouth. So thank you very much for that. I appreciate it. Now let's go on to look at the markets. Let's start off looking at Australia's market. You can see we've been stopped out of this trade on the downside. I don't think we've seen the end of the fall here, but I'm advanced to stop as tight as I could just to pick up some money here, and then we get stopped out. And if we get a little bounce here, I'll be looking for re-entry opportunity at the 50-period moving average here. That's typically the best entry opportunity on the short side, so I'm looking for that. Again, I want to point out you're closing below the 50-period moving average. This is a very, very bearish sign whenever you're doing that. It's indicative of a breakdown. You're also taking out previous lows. We talked about that earlier last week. And so all these things here are very troublesome. So whenever you look at this chart, I want you to start thinking about overall global markets, because you're seeing the same pattern develop everywhere else, but this one's just further advanced. So what you had was a massive move higher, take out the previous high, came up here, you get a shooting star signal, followed by yet another one, 2 shooting star signals, and then you start to break down and just rolling over basically. Now let's look at some other charts. Here we are looking at the Dow Jones Industrial Average. This is one of the strongest charts that are out there right now. Dow Jones and the S&P. But again, same move here. Higher move up here. Shooting star. Pull back a little bit. Shooting star. Confirm to the sell side. Again, we have the marks already on the chart showing that we're rolling over here. And we can do some, because this is one of the stronger charts, instead of seeing more of a dramatic roll kind of situation, you might see some consolidation, just kind of moving sideways kind of situation like that, and then you break down. The reason why I say I believe you break down is because you have the shooting star at the top here, and the shooting star confirmed there. Typically, whenever you have that scenario on a consolidation period, it's indicating the direction is going to break before it actually happens. So I'll be looking for a break to the downside here as well. It should also be noted, and I'm not going to show them to you today because it's just the middle of the week, but on the long-term charts, which are kept on the free website if you want to view them, but the long-term charts are showing shooting star signals forming as of this week in the U.S. markets, and so that's important. Last week we saw them form and on Europe's markets, so that's also important to note. You're seeing sell signals on both the long-term and the short-term charts. When both of those charts are in agreement, this trade is and the signal is that much stronger. Okay. Looking now at the French CAC 40 index, you can see basically what we talked about last week is happening. We had this gap down scenario, and we said, okay, we'd like to see this come up here and fill that gap, and that's what you did. And then you started to roll back over. It gave us another little gap here. We might come up here and test that again. We might just continue to break down here. But in any situation, I don't have a shooting star here, so I haven't marked the chart. We had one here, but we didn't get confirmation. We had one over here, we didn't get confirmation, so we just didn't get in on this trade yet. We'll keep watching it for an opportunity, but there are other European charts that would have given us the right signal, so we'll use them. In case you're wondering, this is basically the same thing. Just come over, take out the previous high, and all we're doing is just rolling over here. Quick glance here at the German DAX composite. This one again the same basic overall story we talked about. You had the gap down scenario here. We expected that to fill as they just come up here and test it. And then we got a shooting star signal confirmation today. So that's again a nice trade opportunity here on the sell side with a stop set off the all-time high there. For now, we'll keep it there. And again, you could still see another bounce come up here because you have formed another gap right here. But I wouldn't be betting any kind of money on attempting a little fade to the upside here. That would just be really, really crazy, especially with the long-term chart showing sell signal already formed last week, and now we have it forming here on the short-term chart as well. Those are in agreement. You want to stay in favor of the actual charts that are telling you the direction. Also point out that any bounce that you get to the upside in a lot of European charts wouldn't matter because you came so close to the high point on the 90 point there. So any move higher would not give you a higher ultimate oscillator signal. Therefore, it would just be a bearish divergence, also telling you it's unsustainable. It's going to break down. So that, again, even if we move sideways, I would expect a breakdown. Stopping for a moment to look at the Hong Kong Hang Seng Index. This is a very interesting chart, and one we talked about last week as well. You basically have the situation, we have the first shoulder formation, the head formation if you will, and then we come down here and we try to form another shoulder formation. It looks a lot like a head and shoulders formation to me, with a very negative slope there for the neckline, and that's very bearish for this condition. Basically, when you close below that that neckline, then you would be confirming that signal. You would simply take the high point down to the neckline, measure that distance out mathematically, and then subtract that from the breakout point below the neckline, and that would tell you about where you're headed before you're going to get some kind of a, either you get to break out, consolidate, or something. So basically we're testing this low point here again. That makes a lot of sense to me looking at this particular chart, and I would continue to be bearish here. Another thing to point out, whenever you're looking at a bullish environment, you will come up, you will find a rally point, and then you pull back to the 50-period moving average. That's normal. That's where you look for your good entry opportunities. You look for a hammer candlestick formation. Well, bam, right there. All that would be, yeah, that's what I'm looking for. That's what I should be finding. Then you wait for confirmation. You want to see a higher high than you had seen on this particular candlestick. Well, you got that 2 days later. So all of that would tell a bull, okay, we have a stop loss limit right here. We're buying right here. That makes perfect sense. And then what happens? We turn around and just come right back down here and form a very bearish candlestick formation, which is calling for continuation to the downside. So this is showing you that the bullish trend here that you typically would be a buyer of is breaking down. You're going to come down here, stop out the bulls, and again be confirming the fact that you have this high point, this lower low between these 2 points, and a lower high. This is, in fact, you're seeing it shift right in front of you from a bull move to a bear move, and you should be noting that. Looking now at the India Bombay Stock Exchange, or the BSE, this one again, the same basic overall chart formation. First shoulder formation comes up, it forms a head, get the shooting star signal at the very top, come back down. The lower close of the close is the most important part. It's what you have to really pay attention to on the hammer. I mean, on the inverse head and shoulders pattern. And then you get back up here, forming the following shoulder, and then you're rolling over now with the hanging man candlestick formation, again in a sell sign, and lower high than you'd seen before. I would look for this to start to pull back down this way, and you would see this neckline right here sloping down, also more bearish when they're sloping down than when they're sloping up, and then the close below that neckline would be confirmation. Right now it's just a potential one, but once it's closed below it, then it will be confirmed, and you'll be looking for this thing to break down this distance. Well, actually I should measure it from here. This distance here, all the way from the close. So we're testing it down here under the 200-period moving average, and that again is indicative bear market. So this is something I've been talking about for a while. I had a lot of people asking me why I was fighting the trend. It's not really fighting the trend. You note this high point here, higher high here. So you got this uptrend going on here, but you got this low point here and a lower low here. So you got a downtrend here. That's conflicting signals. That means one of them is going to be right and one of them is going to be wrong. It's a rolling over pattern. That's all it really is. If you actually pull back and look at the longer term chart, you would see a massive head and shoulders formation actually developing, but we'll talk about that later. The main thing here is, again, I will be testing this breaking down substantially here, and again it's indicating a bear market, so that's very worrisome. Quick glance at the EWJ, the Japan iShares. This one here we talked about last week. It didn't actually fill the gap we talked about up here. We told you that we could see a gap fill here as well, that I wouldn't buy it, but it was something that could happen. It didn't. We instead we kept falling here, and that's important. If you look at the long-term chart, I recommend you do that. I'll probably show it to you later this week on the free website. We keep both my short-term and long-term charts, so you can check them out for yourself whenever you'd like. They're updated nightly, but you'll see that today's activity actually breaks the uptrend line, and that's very, very telling and very important. What's going on in the market right now? You have a lot of people telling you that because of the good news that we had earlier this week, that's putting pressure on the Fed to stop its quantitative easing, and that's true, but I don't believe it's the most important element of what's going on right now in the market and why you're seeing this total breakdown and starting to see rolling over of a lot of markets. I believe what's really going on here, and the real problem, is the fact that interest rates on the bonds are actually rising as bond prices fall. Interest rates rise, and that's got many different problems with it. Now, first, of course, would be that if you have interest rates rising and you know what's going on in Europe, and you know what's going on in the U.S., and you know what's going on in Japan, then that is going to cause problems for Europe. Again, it's going to put them back, basically pull them out of the frying pan and toss them directly into the fire, because they have to sell bonds to pay their bills, right? So when interest rates rise, it gets to a point where they say, you know what, we can't afford that, and so we end up getting in a default situation. So it's very troublesome. Now, bulls would probably argue that, well, they could just come in and with a bigger quantitative easing. Well, I don't think that's the case, simply because Japan stepped out and said we're going to put in $1.4 trillion into ours quantitative easing, which dwarfs everything everybody else is doing, and we're still seeing rates rise. So yields rise. So I really don't see that as being an option. I think instead they're going to have to come out and say we're going to stop the quantitative easing before we get rather than attempt a bubble formation. So I believe they're going to stop, and that's going to you're going to see markets start to crash. Looking now at the FTSE, London Financial Times Index, another one of our short positions here, and again, no actual strength, no bouncing of any kind here that's any kind of strength that you'd want to be a buyer in. You want to be trading this from the bear side here and be looking for a test of these lows here. I do not see a hammer candlestick formation at the bottom here, and therefore I don't expect it to hold, nor here. And whenever that scenario happens, I expect when it's tested, it will snap and give way very easily. So again, all we're seeing is what we talked about before. Is just you had the higher series of highs and the lower lows, and that's just basically an overall rolling over the longer term chart, head and shoulders formation, whatever. But the basic thing is you're going to be going lower. Quick glance here at the NASDAQ, the same basic overall story, just rolling over scenario. Could be doing some consolidation to the sideways before this is all over. Today's activity comes back down and fills this gap that we had marked here, and then we have another gap above us, so we could just kind of bounce up here and do this kind of number. That's fine too. Look for a nice entry opportunity on this one on the sell side. Looking now at the Wilshire 4500, you'll notice again on this one, same basic overall pattern. Nice move to the upside, taking out the previous high. You can see here, but low point still trending down. You're going to be coming down here and testing those lows. And again, I would expect this to be taken out. There's no hammer candlestick formation here. Also, you'll notice that you have come up here, pulled back down, and bounced up here, formed a shooting star you didn't have before. And then you also have a lower high confirmation today. All of this is in line with a breaking down situation here, and I would like it from a sell perspective. It should be noted also yesterday, let me show you on the website real quick. Okay, here we are looking at the website, and if you go here under the trade section, you'll find the alert that I issued yesterday. It was a very great opportunity that I see there. Still, and it's already making money, but it's a good one. And then also, if you're looking for my personal charts, short-term or long-term, you can go right here under the market charts. And for those of you who are looking for different methods for trading, there's the trade school section right here under the technical school. Okay, God bless, take care, and I will see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.